Have you ever wondered why some people seem to have the Midas touch when it comes to investing, while others struggle to break even? This question may have crossed your mind as you navigate the world of investing. The answer lies not only in the knowledge of market trends and financial strategies, but also in the realm of psychology. Yes, you heard it right. Psychology plays an instrumental role in investing. It's about mastering your mindset, understanding your risk tolerance, and making decisions not driven by fear or greed, but by informed judgment. It's interesting to note how certain common psychological biases can sway our investment decisions. Biases such as overconfidence, confirmation bias, and loss aversion can often lead us astray from our financial goals. But don't worry, these can be overcome with awareness and discipline. In this video, we'll explore the fascinating world of investing psychology and how mastering your mindset can lead to long-term financial success. One of the biggest hurdles to successful investing is our own mind. It's a fascinating fact that our brains are wired with certain biases that can often cloud our financial judgment. Let's delve into a few of these common psychological biases that can impact our investing decisions. First off, we have overconfidence bias. It's that brash voice in our heads that convinces us we're smarter or more capable than we really are. It can lead us to underestimate the risks involved in our investment decisions or overestimate our ability to predict market trends. Overconfidence can make us believe that we can outsmart the market, leading to rash decisions and potential financial losses. Next, we encounter confirmation bias. This is the tendency to favor information that supports our pre-existing beliefs, while ignoring evidence that contradicts them. In investing, confirmation bias can blind us to important market signals, causing us to hold on to losing investments too long or to jump into risky investments without a thorough evaluation. Finally, let's discuss loss aversion. This bias describes our tendency to prefer avoiding losses over acquiring equivalent gains. It's the reason why the pain of losing $100 feels twice as intense as the pleasure of gaining the same amount. In the realm of investing, loss aversion can lead to an overly cautious approach, causing us to miss out on potential opportunities for growth. These psychological biases can play a significant role in our investing decisions, often leading us down a path of irrational choices and missed opportunities. They can make the difference between a successful investment strategy and one that flounders in the choppy waters of the financial market. By recognizing these biases, you can better manage your investment decisions and avoid common pitfalls. Understanding the workings of your mind and being aware of these biases is the first step towards making smarter, more informed investment decisions. It's an empowering journey that starts within, leading you towards a path of long-term financial success. Discipline is a key ingredient in the recipe for investing success. This is a truth that stands the test of time, regardless of the ever-changing dynamics of the financial markets. But why is discipline so crucial in investing? Let's start by understanding the nature of the market. It fluctuates, sometimes subtly, sometimes dramatically. These fluctuations can arouse a wide range of emotions in investors, from excitement and greed during bull markets to fear and panic during bear markets. This is where discipline comes in. Discipline in investing means sticking to your predetermined investment plan, regardless of market conditions or your emotional state. You see, reacting emotionally to market fluctuations can lead to hasty decisions that deviate from your investment plan. This is commonly referred to as emotional investing, and it's a trap that many investors fall into. Consider this scenario. The market is on a downward spiral. Investors around you are selling in a panic. The fear of losing more money tempts you to follow suit. But if you've done your research and believe in the long-term prospects of your investments, discipline would dictate that you stay the course. Similarly, in a bull market, the euphoria of seeing your investments grow might tempt you to overinvest or take unnecessary risks. Yet again, discipline comes into play, reminding you to stick to your investment plan and avoid getting carried away by the exuberance. But how can you cultivate discipline in investing? It starts with having a clear investment plan, understanding your risk tolerance, and setting realistic expectations. It also involves continuous learning, self-reflection, and the ability to keep emotions in check. Remember, investing is not a get-rich-quick scheme, but a journey that requires patience, perseverance, and yes, discipline. In the grand scheme of things, Maintaining discipline might seem like a daunting task, but it's a task worth undertaking. For it's in the face of volatility that discipline proves its worth, helping you navigate through the ups and downs of the market, keeping you aligned with your financial goals and steering you towards sustainable, long-term success. Maintaining discipline is a key component of a winning investment mindset. And that, dear friends, is the power of discipline in investing. So, how can you develop a winning investment mindset? Let's dive right into it. Firstly, it all begins with setting clear financial goals. Determine what you're investing for. Is it retirement, a new home, your children's education, or simply growing your wealth? By having a clear goal in mind, you'll be more motivated to stick to your investment plan and less likely to make impulsive decisions based on fleeting market trends. Next, patience is absolutely crucial. The most successful investors are not those who are constantly buying and selling, but rather those who make sound investment decisions and stick to them over the long haul. It's important to remember that investing is a marathon, not a sprint. The stock market has its ups and downs, but over time it has historically trended upwards. So, don't get too caught up in the day-to-day fluctuations. Instead, keep your eyes on your long-term goals. Lastly, commit to continual learning. The world of investing is constantly changing, and there's always something new to learn. Whether it's reading up on the latest market trends, studying financial reports, or learning from successful investors, ongoing education is key to staying ahead of the curve. The more you know, the better decisions you'll be able to make. In addition to these strategies, it's also worth noting the importance of staying disciplined, maintaining a balanced portfolio, and not letting emotions dictate your investment decisions. These habits, combined with a clear goal, patience, and continual learning, form the bedrock of a winning investment mindset. Remember, developing this mindset is not about being right all the time. In fact, even the most successful investors make mistakes. It's about making more informed decisions, sticking to your plan despite market fluctuations, and constantly striving for improvement. Remember, a winning mindset doesn't happen overnight. It requires patience, discipline, and a willingness to learn. So start today, and watch as your investment journey transforms from a daunting challenge into a rewarding experience. Let's quickly recap what we've learned today. Our journey into the world of investing psychology has revealed some fascinating insights. First and foremost, we've seen that psychology plays a pivotal role in investing. It's not just about numbers and market trends. Our mental state, emotions, and cognitive biases can significantly influence our investment decisions. We've touched on some of the common psychological biases that can cloud our judgment when investing. Confirmation bias, for instance, where we place more weight on information that supports our existing beliefs and less on information that contradicts them. And let's not forget about loss aversion, the bias that makes us feel the pain of loss more acutely than the pleasure of gain, often leading to risk-averse decisions that can hinder our investment growth. Discipline, we've learned, is an essential ingredient in the recipe for investment success. It helps us to stay the course during market fluctuations, resist the temptation to make knee-jerk reactions, and stick to our investment strategy. Discipline is what enables us to keep our emotions in check, avoid the pitfalls of psychological biases, and make rational, informed decisions. And finally, we've explored how to develop a winning investment mindset. This involves cultivating a long-term perspective, maintaining a positive attitude, and continuously learning and adapting. It's about understanding that investing is a marathon, not a sprint, and that patience and perseverance are key to achieving long-term financial success. By understanding and mastering the psychology of investing, you can take control of your investment journey and achieve your financial goals. Remember, your mindset is your most powerful tool. Use it wisely and it can open up a world of possibilities, so keep learning, stay disciplined, and let your mindset be the driving force behind your investment success. Thank you for joining us on this journey into the psychology of investing. We appreciate your time and hope that you've found these insights into the mind of the investor enlightening and useful. It's a fascinating world, isn't it? The blend of finance and psychology, the interplay of fear and greed, rationality and bias. If you've enjoyed this exploration and found it valuable, we'd be grateful if you could express your support. A simple click on the like button goes a long way in helping us reach more people interested in mastering their investment mindsets. And And if you have any thoughts, questions, or experiences you'd like to share, please do leave a comment. We love hearing from you. Don't forget to hit the subscribe button too. That way you'll be notified whenever we upload a new video, keeping you on the path of continuous learning and growth in your investment journey. Remember, the key to successful investing lies not just in the numbers, but also in the mind. Stay disciplined, keep learning, and happy investing.